What's going on, guys? Just give me a quick sound check. We'll be good to go in a minute. Sound should be good, but I haven't been on a stream in a little while, so I just want to make sure that everything is dialed in. Sound is good? Cool. All right, guys. What's going on? It's 7 p.m. New York time. Opted for a late night stream. We'll see how this goes. Sometimes I feel like if I stream earlier in the day, kind of I don't know. It obviously interrupts my trading day, but I always wonder like what my energy levels will be if I do the late night stream. But honestly, I mean, from the first few seconds, I might find these a little bit more chill. So maybe we'll start doing these. I'll take a look at the chat in a second. I just reshared the link, so I'll give that a minute to marinate, and then we'll be good to go. Got plenty of stuff to talk about, obviously. Let me switch it up. Say hi to everybody. I have the camera on. So this is my face. Turned off the lights, turned down the lights a little bit, and went with the dark mode because I know some of you guys appreciate that. I mean, I'm usually never in my office to the point where I'm going to have the lights off anyway. I mean, I'm in the office during the day, obviously all morning, and then when I'm done, I'm not hanging out in here. I mean, sometimes I'll play like some Call of Duty or something, but few and far in between now with the little one. Okay. Let's get started. So we're obviously going to talk about BTC. We'll talk about ETH. Talk about alts. I'm going to keep this short and sweet, like I said. I mean, what that means is ideally we'll have this run under an hour. I mean, 45 minutes to an hour would be the sweet spot. That's the thing that sucks about the streams. Like, I could riff. I could tend to talk myself in circles, and you know, that could end up tagging on a bunch of time that's unnecessary. So also shout out to the guys who handle my streams now and handle my YouTube, because they do a phenomenal job of cutting it up. So if you are on this and you're like, fuck this, I don't want to hang out here anymore, you know, they're going to post a chopped up edited version for you guys within the next day, and you know, all timestamps, cut down, all that. So before we get into it, as a reminder, none of this is financial advice. This is strictly for entertainment purposes only. Just giving you guys my opinion on the market. It's coming from someone today who actually lost money, so we'll go into that. Like I said, I'm going to go into prices, but I think this is going to hopefully be a little bit more of a qualitative stream, you know, rather than me specific. I don't know if I would say quantitative if I was just talking about prices. That sounds a little overdone. But yeah, just some useful reminders I think that you guys would benefit you, because I know a lot of people are probably feeling FOMO. They're feeling, you know, pulled in multiple directions. So we'll go into how you could begin to help yourself with that. And a lot of it honestly revolves around organization. You know, big whoop. Yeah, anyhow, first and foremost, you guys see this DOM on the right hand side of the screen. You see Woo, obviously. Shout out to one of the new sponsors of the stream. Woo is it's a newer exchange, but it has the, as you can see, best liquidity, lowest fees. They're an exchange built for traders essentially. So what you'll see is on the right hand side of the screen, I have one portion of the desktop, the website, but you could have multiple DOMs running across this thing. For the sake of the stream, I have the ETH and the BTC DOM, but this is everything that I've always wanted from an exchange UI with the DOM right on it. So what do I mean by the DOM right on it? I mean, if we want to just click on this thing and buy BTC and place orders in the bid and the ask very quickly, right? So almost exactly what I'm using when I'm trading the ES or the NQ. Not exactly, but for the sake of execution and speed, it's right there. What I do want to say is that anyone who trades on a different exchange right now, Woo is going to match your fees, or beat them rather. So everyone knows how, from a spot standpoint, they're the most superior exchange for fees. If you look at their liquidity, their dashboard, you could see for 99% of traders, they would really benefit on trading, you know, trading on Woo than any of the other competitors. If you do opt to switch over to Woo, they, like I said, will beat your fees. If anything, one of the better things about it is they're just really upfront. So your balance sheet, the reserves, all that stuff is up to date, is published right front and center, which I think is something that's really important right now. So shout out to them. The link is below. I don't want to go into it much longer because you guys know I don't really like to shill anything, but I do like to put my my word behind what I think is a good platform. And yeah, they're only available to people that are outside the United States. Obviously, I could talk about platforms that are not in the United States. You could pull them up, but can't actually go ahead and to trade on them. You have to be someone who's a resident outside the United States. Just you have to have some kind of residency. Anyhow, I'm gonna leave that up. So there's a couple things I want to go into. There's a couple other links below. If you guys see any of the platforms that any of the platforms that I use and you're interested, just reach out to me if you're curious. I get questions all the time like, what were you looking at? Where were you getting those CVDs? A lot of it's mostly just like CoinAlyze and Velo now. I don't know if those links are actually below, so I don't want to. I don't know if they're in the description. So sorry about that. Okay. Anyhow. So let's get into it. So yeah, actually I lost money today. So I ended up basically flat. Not flat. I mean, after fees, after being offsides slightly, and then a big XRP win, I was basically, I had a losing day, which kind of fucking sucked because my XRP win was pretty significant. Calling it a win. I don't know why I'm calling it a win. My XRP long. Whoops, hold on 1 second. Let me turn that off because those are my alerts that I've set, which is part of what I'm going to go into in the stream. So first things first, we'll take a quick look at XRP, so you guys are aware of what happened. There was a fake ETF filing, and this was posted on Twitter, and this is basically the price action right after that. So you're looking at 15-second candles. So, I mean, 15-second candles, not for nothing. You're looking at 1, 2, 3, 4. That's 60 seconds right there. So that's a minute past. Even if you got to this thing late, you were able to tag on a decent position and ride the lightning. And that's exactly what I did. I saw a post by Summer Things. So if you guys go onto my Twitter, check this account out. So Summer Things is a great account. I know that they are putting together something that probably will benefit people that are trying to get breaking news, news traders specifically. You guys know that was like a big, that was a big thing a couple months ago. For a while, the market was pretty saturated by news traders. You couldn't really, if you didn't have the infra, if you didn't have the access, like you were late to really everything. But I think the market has gone back to really inefficient mode. So I was late to this. So I was late to this by, I don't know, I think I was like a minute or 2 minutes late. Either way, I ended up longing up here. So I was well into profit, and I had an over leveraged ETH long. So basically my XRP profit was substantial. And then on the backside of that, my ETH loss ended up basically wiping that out and then some, which sucks, right? So I think that brings me into, so I'll go into like just my thoughts real quick before we take a look at the market. This is okay. So first and foremost, like trading on its own is very difficult, right? I mean, it goes without saying. Sounds kind of ridiculous, you guys know that. Trading is very difficult. Okay, in normal circumstances, so just me personally, let's say normal circumstances, I might be monitoring 3, 4 max assets at once. I like to stick with, I don't like to have too many line items. So you guys have heard me say that before. By too many line items, I mean, you can just see my alerts popping up now, and they're actually going off on my phone too. By too many line items, I mean, exactly as that sounds, multiple positions open, which is something that's really easy to do during a time like this when there's really nothing special that anyone's doing when they're sharing their TA or sharing their ideas on Twitter. So I posted that the other day. Even myself, like sharing setups, it's the market right now. Like everything is catching a breeze, everything is catching a pump, and it's been, for the most part, somewhat sustained. Before this, like I said, trading on its own is difficult when you're only trying to, like I said, it's 3-4 for me. I'll trade BTC, ETH, and then what is basically the, maybe the flavor of the month, or where most of the attention is at any given time. And that might be one or two pairs, and you might, rotate that over time. But again, it's never going to really expand much beyond that. Just doing that. So even if you're just trading one thing, Summer Things, yes. So shout out to Summer Things. Go ahead and follow this account. Even if you're just trading one asset, that requires your full attention, right? If you're an intraday trader, even if you're a swing trader and further up, like trading is something that requires your full attention, right? Your full attention, not only just the attention of paying attention and observing, but you have to be really sharp. So on its own, it's very, very difficult. Now imagine what it's like for 99% of people right now when everything is moving. You would think it'd be really easy because, all you have to do is kind of throw a dart. But for people that are late, this is where it gets really difficult. A lot of people don't buy the bottom. A lot of people don't get in position earlier or do what I talk about frequently, which is just place an anchor position on, right? Tag something on so that you pay attention. Right? This is something that I commonly do. It's something that I frequently reference. Putting on a small position is something I'm interested in. It might not be the best technical setup. This is more for a swing, a longer term position. But at least it forces me to pay attention and have a little bit more feel for that, how that asset's trading versus just, leaving it on your watch list. So if you don't have any positions established and you see that the market is, in many cases, if we just look at, let's say over the last month, for example. So over the last month, go to percent, and we'll just run through these. Algo, 46%, 33%. And this is the last month, so 30-day period from whatever today is, right? So today's the 13th. So this isn't including all of October. But, you just go down the line, right? And we had a big pullback today, but even still, AVAX up 79%, put in a really big move the last 2 days. Bonk, right? 1,000% basically, CFX. But you get the idea. All of these pairs are up tremendously. So, a lot of people missed out on these moves, right? Or they arrive to them whenever they're already up 30, 40%. And considering the conditions that we're coming from, right? So we're in a bear market. Market was choppy and sideways and very uncertain for a long time. It's pretty normal to look at a 30% move or a 20% move as possibly being something that's going to mean revert or something that you should fade because that's been the case for the last few months. So when the market continues up instead, it puts a lot of people on their heels, right? And like I said, the trouble is in trading, it's difficult already, even if you have it just isolated down to one asset. If you were just to say, hey, I'm just going to trade Bitcoin or I'm going to just trade Solana, you still are, you have a really tall task ahead of you to be a successful trader, right? So now you have this crazy frenzy, and it's sort of like, you ever see those game shows where they send people in the store with a, list of items. They could get all these things for free, or they have to go through the grocery store. I forgot, it used to be on TV years ago. And it's really difficult for people, even if they know that everything is free, right? And it's a game, to get what they want, right? Because suddenly they are just, inundated with possibility and choices and overwhelmed rather. And instead what happens is they freeze and they're unable to execute. So what you need to do is you need to obviously, during times like this, you have to have some kind of system and organization in place so that you know how to basically react rather than have to think your way through this, right? You have some kind of system in play that that you could fall back on. And one of the things that I think that people don't do enough of is honestly use trading view alerts. So I'm just going to give you some insight real quick into what I'm doing with alts right now. But organization is really important. Like, let's say you were, everyone's probably familiar with this. Anyone who has a tool set, You know what it's like when you have to fix something and you go into your tool set, whether it's a tool bag or you have a chest, and things are out of place, right? And this is why it's always important to put things in their place, have things set up perfectly so that when the time comes and you're like, oh shit, I gotta, I really need this, whatever, Allen wrench. I know it's an interesting analogy, but it's in its right place, right? Everything is set up for the job versus, same thing with a surgeon, right? Surgeon is very organized. They don't go to the operating table with the tray with like a scalpel and then, the forceps and all that stuff kind of just put in a pile or left in remote places. Everything is lined up and set up for the job. So that's how you always have to be prepared when you're facing the market. It's the same exact thing. So one of the things that I think that could really benefit you, and I'm just going to go into this, it's honestly, I'll call it alpha, but it's not. It's very simple stuff. It's just using alerts. So if you look back at previous bull markets and really strong trends, what you'll notice is it's actually really difficult to, I mean, from a textbook standpoint. So if we just look at BTC right now, if we look at BTC, like, yeah, in a textbook, you would want to see a support and resistance retest. But if you look at this, like on the daily, I mean, it's just been kind of, sweeping prior daily closes, daily opens, and resuming up. I mean, this entire trend right here, like you didn't get a pullback to the most important contextual level. Instead, we just nuked right through it. By the time you do have a pullback on higher time frame structure, it's going to be really ugly. And a lot of times people are not going to want to buy it at all. But, there's got to be other things and qualifiers that you have at this point because a really strong trend is not going to give you, the cleanest entry. So one thing that I'm doing right now, and when I say clean, I just mean from a market structure standpoint. Like if I look at this chart, honestly, in BTC right now, the area that I think maximum fear would occur and where I think maximum opportunity would be down here around this gap, right? So we're all familiar with like how I trade and, gaps and vacuums left and single prints. And, these are a lot of the times the oh fuck area where it's actually really good to get involved. If you see a liquidation cascade through here, a lot of people are going to be panicking. Oftentimes that's the thing that's going to rip back up with just as much ferocity as it did on the way down. But, we might not even get that. We might get just a very shallow pullback right now. In alts, it's the same thing. It's like alts have a 10% pullback. Is that the cleansing? Do we need a 30% pullback? I mean, in prior bull markets, they've had 25, 30% pullbacks intraday before ripping back upward. So one thing that I think you could do with alts is honestly, because it's a really strong trend, if you look at BTC right now and we put on like a moving average, like a 20-period moving average on a 4-hour chart, this is something that other traders on CT commonly use. Like there's a guy named Pierre. Skew talks about this. I've talked about moving averages ad nauseum. I've said how, I came to this market, trading this market as a trend follower and using moving averages, honestly, because it was a really strong trending market. So something like this, a simple moving average, right, on a 4-hour or a 1 hour, just for, the intra-week, intraday trend. Also, and these will often act as dynamic support or resistance before you get any kind of major pullback to market structure levels if the market was still ranging. But also another thing that I think you could do, and this is what I've done, in previous really strong trends in previous bull markets, one thing that you notice is that the market will cool down from a momentum standpoint, and that might not even be anywhere near a key level in market structure. So if we look at, for example, this list that I have here, this entire list of alerts is just based on RSI. Okay, this is only based on RSI. So this is based on first touch of the 60 level. So what that means is, so for example, so I just have so up here, you'll see, I think you could see I have FMP. Okay, so what that means is I have my flow suite. So in terms of order flow tools, just like relative volume. And then I have, profiles and your VWAP and key levels. But then if I go to M, that's just my momentum suite. So I say suite, but what is it really? It's an indicator template. So that's just volume profile, visible range, RSI, and then relative volume, and then a moving average, and then planes for plane, right? Sometimes I create a big grid of prices. If you do this on TradingView and you don't have it set up right, like a bunch of old charts will pop up with old indicators. It's like, what the fuck? So I just have the plane set up. But one thing that's quite evident actually is that, yeah, in a really strong trend, you're not going to get a textbook pullback. By the time you do, the trend is kind of fucked. Honestly, a lot of times, by the time you get a really, I keep using the word textbook because if you read like a TA book, this is what they're, retest support and resistance zone, like, buy support, sell resistance. That works in a range a lot of times, but in a really strong trend, like it's really strong because it doesn't give people entries, right? It forces people into the market. It forces them to chase up. It's imbalanced, right? One side is imposing itself on the other, right? For multiple reasons, whether it's short squeezes, whether, it's a news catalyst, it's a combination of them, a bunch of demand for the spot market. There's a lot of different reasons, obviously, but it's a very imbalanced market. You're not going to get that perfect pullback. So one thing that you do see is that, you'll get these sort of momentum cooling periods and, cold-blooded Schiller. He's a great example of someone who uses RSI heavily. He uses RSI all the time, right? I'm fairly certain. He could correct you about divergences and whatnot. RSI divergence you're always going to get. In a trending market, you're always going to get an RSI divergence that's bearish. In a strong bull market, you're always going to get bearish divergences because it just implies price has slowed down somewhat, right? It's always going to happen because the RSI is based on a look-back period, right? This one is a 14-period look-back. So at some point, unless the prices continue to move up faster and faster, it would always show a divergence, right? It's always going to cool down. So one thing that I think, just give you an example. One thing that everyone is talking about, everyone is obviously looking at is Solana, right? I think Solana probably puts in a deeper pullback than other pairs, just because it's really overextended. It's not overextended, but this is kind of saturated at this point. Where do I really want to start paying attention? And I don't have them set to the deepest point. I have it set at 60, not at 50, which is the midpoint. So I just want to know, okay, all right, add Solana to a different watch list, add some different alerts at this point to really start to focus on it. But what you'll see is that when these trends, so let's go back to an old chart, bull market, where I know there's a ton of price history. ADA came to mind. So here is 2020, right? So all these moves up had very big pullbacks, right? So from peak to trough, 32%, peak to the main pullback for that one, 30%, up here, 30%. So you're looking at this and you're thinking, fuck, that's it. But one thing that you'll see is they instead of coming back all the way to a prior level of market structure, like my point about textbook is in a range in old conditions that we were trading within for the last few months, year plus, if we were looking at something like this failing, or just in general, a lot of the people would start to see, imagine none of this occurred, see this occur, think that this is a swing failure, you're going to target these lows, and then we're looking for some kind of reversal. And this is the area where I want to look for, a dip buy rather than a continuation play, right? I want to look for a first major bounce at this level, lines up with, key levels stretching back further to the left, right? Oh, that I didn't mean to use that. Whoops. Let's just fix that real quick. But instead, you don't get any kind of, you get a pullback level of around 30%, right? So what you can start to do is look at alts and start to map out from pullbacks that sort of 25-30% zone, because alts are, they flush out. Or you could start to look at when the RSI cools off. So it comes back down to that 50 level, 60 level, and begins to base out, and price is also basing out and not losing market structure. So we're not making any lower lows, lower highs, or anything like that. Whereas like one good example, so my point in all this was, instead of me just kind of relying on memory and relying on looking through this watch list every day, I know what I want to focus on now. I don't know where it's going to pull back to. I know where I'd like to get involved if it did, but instead I want to also be alerted to other things as well. I want to be alerted to know when MATIC cools off from a momentum standpoint, right? Because I know at that point, if MATIC is at 50, 60 RSI after this trend, I know if we're still moving sideways and there's other factors that are confluent with, a correction that's showing signs of absorption is likely to lead to continuation. If I just have that extra detail, I'll be more confident at that point. And now I know, okay, when it's gone off, all right, put MATIC to the top of my list. I don't have to focus on going through every single pair in the watch list every morning because I have some kind of filter. So the point is, if you want a chance at doing well, you have to have some kind of filter in place so that you can be more organized. And the whole point is that, TradingView, or one of the points is that TradingView has a good suite for this, right? Setting indicator alerts, setting level alerts, setting condition alerts, all that stuff is possible, right? And this is, it sounds like a TradingView shill, but it is what it is. You can put alerts on almost any platform at this point. An example, so for, if we look at most alts right now, and then I'll go through just a bigger picture view of the market right now, and then BTC and ETH and some requests. If you look at market structure right now for most of these alts, like there's no major breaks in market structure, right? So we have, grinding up here right now. Most of these put in very significant moves. So AVAX put in a pretty ridiculous move, right? I think I shared this at 1280. My target was well before, it was like 15 or something like that. And this ended up moving up another 50%. So that's the environment we're in right now. There's massive overextension. Wouldn't want to buy anything, honestly, where it is right now. So again, I'm waiting for some of those conditions to be met. And my point was that cooling might happen up here, right? It might happen shallow. That's the point. Strong trend, shallow pullback. I want to see something else besides waiting for it to come back and retest. So most things have kind of maintained market structure as well. So that's healthy. An example, I think, I just remember seeing this, something that broke market structure, ENJ. So this is an example of something that has broken down. Depending on how you look at things, we have, this is a lower high right here and a lower low in the making. Now, in these conditions, like I wouldn't get too committed to again, anything that's really basic. And when I say basic, I mean just the whole concept of higher highs and higher lows, right? That can all change very quickly. So I just want to point this out, right? This is one of the only things that you've actually seen, like, some of these have double topped, but for the most part, the conditions have been absolutely crazy. So setting alerts, being organized. If we look at the entire market right now, so this is a chart that everyone was sharing. It's the funding rates, right? So, the funding rate, obviously, you guys should hopefully be somewhat in tune with funding rates or knowledgeable about them. This is tied to the perpetual swap, right? Perpetual swap is basically like a constantly settling futures contract against the spot price to continue to keep those in line. So the spot and the futures contract, rather than have it traded a steep premium without a funding rate, sort of like it's a linear futures contract with a 30-day, 60-day, 90-day quarterly expiry, where they're going to trade at either premium or discount, being contango or backwardation. They use a funding rate, right? So it's an incentive mechanism to arb that difference. Positive funding rate, that's means that longs are going to pay shorts. Negative funding rate, shorts are going to pay longs. That process hopefully creates the mechanics that line the markets up. There's an arb behind this, obviously, when things get very steep. This is used as a sentiment indicator, right, when it's blown out. So positive funding across the board. You don't need to look at this to know that the market has been really heated up. You just have to look at the futures volumes. You just have to look at prices. This is also a function of liquidity, though. So one thing you have to understand is that, or I should say, it's a function of liquidity, and it's normal in strong trends. So in a bull market, like, everyone's sharing this chart and the value is at 2, 3, so 2 basis points. So just like focus on, in terms of just me using this language and you following along, let's look at XRP. So Binance, it's 1 basis point. OKX is 3 basis points, 1 basis point, 1 basis point, 7. But, things were earlier this morning, last night, 3, 4 basis points. Now, if you annualize that and, depending on funding rate intervals from exchange to exchange, it might look like, holding an alt would be 150% annualized, right? So obviously that you're not going to hold an alt for a year, but the point is, like, this is decay on your positions over time. My point is that what you have to be careful of is looking at this and immediately fading it, right? So you're going to want more information than this, because it's also a function of liquidity, right? So certain pairs will blow out more than others. So the funding rate would be really steep or really steep to the upside. So very positive or very negative. And it's a function of liquidity because it's a thin pair and it's tough to keep it in line. But what you have to understand is that as markets get one-sided, either up or down, it can persist for a while because it's the side of the market that's getting hit the most. So in a really strong uptrend, That's the cost of doing business in a really strong downtrend. That's the cost of being short, right? But it doesn't mean that the trend is, or the people that are in those positions are going to be wrong. It just means that, think about it this way. If the market is really strong moving up, right, it costs you more money to do what everyone else wants to do, which is long the market, right, to get that upside exposure. So you have to pay, to maintain those positions. So this is something to keep in mind, but it's also worth keeping it in mind or it's more important, I'd say, when it's leading to nothing. So it's a positioning tool also. So you get an idea of where the market's getting hit. If the market continues to move up, no problem. I don't think that the people that are long something that goes up 50% are upset about paying 150% if they had to hold it for a year. No, they're going to be out of that position in a couple of days. That move happened in 30 minutes, right? So it's more than made up for. It's not an issue. What you do have to think about is when the funding rate is really positive and price is now beginning to be stagnant, open interest is high, and then price is starting to lose levels. So if you had a really stretched funding rate, price is moving sideways, open interest is really elevated still, and then as price begins to move down, you start to see liquidations pick up for small moves, right? Meaning it's like sensitive lower. Then that might be a good sign to pull off some risk or to maybe take the other side. But on its own, it's not good enough. If we look at, and I know it's kind of a holistic view, we'll look at BTC in a second. Things to be mindful of. So the pinch. I've talked about the pinch before. The pinch, what I call the pinch, it's when dominance by open interest between alts and BTC begins to converge. So, we're at we're at highs for the last couple of years. So for alt open interest, BTC dominance was up until I think the 27th and then has dropped down since then. Alts caught an awesome gust of wind. But alt dominance by volume and open interest up, BTC dropping. A lot of times this has been in bear market conditions. What this was is money's coming out of BTC, it's going into alts, and then instead of going back into BTC, this is where it mattered. It actually, everything came out, right? So it was just positions were sold off, positions were liquidated. So this pinch was a sign that the top was near. So when they're converging, right, it's always been a sign that at that point, maybe it was exhausted and we're looking for some kind of cleansing. The flywheel of a bull market is where this happens, right? Then the open interest and all the money that's taken out of alts successfully goes back into BTC, goes back into majors, and then we have this rising effect over time. And instead of this just maintaining the same range over time, open interest for alts, so it's not going to be by percent because those can stay the same. Open interest as a whole for alts goes up. Open interest as a whole for BTC goes up, right? So you want to pay attention to just absolute values and open interest as well. For short-term trades, relative values are more important, but for absolute, for a bull market, you should see open interest continue to go up over time, right? Especially after we're out of the lows, you want to see people actually interested in the trend. So yeah, I think it's dangerous to say that we are, at this point during the stream, BTC tag 36.2. Let's go to BTC. I don't want to drown on too long. Okay, so what happened to my nice 3-chart setup? One sec. I'll take a look at the chat in a second. Here we go. So one thing that I think you have to do in event, so I should have said this earlier. When you're conditioned to expect pullbacks to major support levels and retests of levels, and you're in a really strong trend, you're not going to, like I said, if you get it on the weekly, that might be it, right? If you get a pullback on the weekly, you better hold the prior weekly range, hold the prior weekly open or weekly close, depending on if it's red or green. Otherwise, that might be it. So what you're forced to do in strong trending markets is zoom in. One thing that I would do is I'm someone who trades lower time frames. But if I'm swing trading, my low time frame is like an hourly chart. An hourly chart, a lot of the times with these alts, you've seen the hourly pivots work really well. So, if we look at BTC right now, I think one of the setups for BTC would honestly be if we're able to get back inside the last 3-day range. So, right now we actually had the daily close. So it was the first time that, so I'll stretch this out a little bit. So you'll see that we had an inside day. So actually I could zoom that in. So BTC had an inside day. So you had this day right here engulfed in that day. You had an inside day break. So a lot of times when you get that commitment outside of, so I'll just draw that real quick. Snap this 1 sec. So here is the inside day setup. Okay, so this day, so the 12th inside of the 11th. And what you're looking at is acceptance outside of, right? Outside of the 12th low, playing to the extreme of the day prior. In this case, we actually closed out, right? So you'll look for fake outs through this level, right? So you'll look through a fake out. I'll put my profiles on. Actually, let me shrink this up. I'll go to, this will be better. So here's the levels I'm talking about. Here is the 11th. You have the 12th fully engulfed. So you have that inside day. That closed out. Best case scenario for us would have been us to get back within that range. Instead, obviously, we have broken outside of it. And we have our first close breaking down outside of the last 3-day range. So I think, obviously, bulls want to get back inside of that composite. So you have a nice clean area of value in the last 4 days, right between 36.8 and 37.4. You know, we're trading at weekly VWAP right now. Would it be weird to see us retest that after being extended 1 standard, 2 standard deviations above for a while in a really strong trend? No, absolutely not, right? So I still, for short-term trades, I would want to see that we're at least back above today's open, right? So daily open right now, I think it's just kind of one-sided, right? I mean, we don't have, do we have a wick? We don't really have a wick at all for today's daily open. So that's the first area that I would look to see how we get a response. If we, I mean, we should revisit that, to be fair, right? So if we revisit the daily open, right, and we move up and we cannot get back inside yesterday's value. So yesterday's value is, like I said, what I say, 36.8 for that entire composite. But the lows of this range for, you know, what just closed out, 36.7. If we can't get back inside of there, you know, if we get back inside of there, I would say that you just target, you know, the midpoint of that structure. You target yesterday's value area high, 37.1, you know, intraday trade. But otherwise, I mean, if this could possibly be the dip, right? The dip before we reattack, you know, what is currently the highs. But if we don't, right, if we end up breaking above the daily open, retesting that 36.65 level, 36.7 level, and you see absorption at that level, and you know, spot just continues to hammer it again, that could be today's wick, right? And again, maybe we're getting sort of a short-term cooling of this trend because we haven't really had much. One thing I'll point out is if we go back, and I'll pull this up on another chart. If we look at BTC now, the kind of structure, a lot of times I see a structure like this. I think this. You either end with something like this. From where we are now, we do that, or we take this high and then we end up doing that. This is, you know, we've had a really strong move, right? You have the ETF announcement that took us here, the fake one, the real one, the, you know, strengthening of that. Obviously, it's going to happen. ETH ETF, you know, XRP bullshit one today. Thank God it was bullshit. I think that would have been terrible for the market. Would have made it all a real big joke. But still, like, I don't think there's much upside before we get a deeper pullback. I think you get an ETF announcement, you tag 40 again maybe, but then we have, I mean, this is already kind of saturated. Then maybe we get our deeper pullback to right around, you know, again, let's say ETF announcement came out in the near future, tag up to 40, and then we get some kind of pullback back to this gap. But I see something like this, and then, you know, a lot of times I think sweeping of that gap right away. And if you go back to, like, this is a almost identical structure. This is going back to April 2020. You have this grind up right after a big extended move, and then the market kind of just dies above that. Now, mind you, this is in the higher time frame resistance, you know, but this was a big catalyst off of COVID lows, right? There's some Michael Saylor, Paul Tudor Jones talking about BTC. So, I mean, it's not the Larry Fink, it's not BlackRock, but had a really overextended move and imbalanced move up, and then ended up cleaning up that gap and then moving sideways. This situation is, you know, it's a little bit different because we're actually back into what I think is a range that we could trade in, and still not make an all-time high in the near future, but still just trade within this pretty nicely. So I think if we hold above, as long as we hold above 31, everything's cool, right? So 31, this retest of this level, it's going to look really ugly, but I think it would end up being something like this, right? Oh, fuck, that looks terrible. Melt down all this air, hot air below that. But honestly, I think the more important, so bigger picture view, I think more important is that we're back in this range. So I think that, higher time frame, 45K gets visited over the next few months. But I'm just looking at this right now as thinking maybe it's due for its cool down in the near future. And if we get an ETF announcement in the next month or the next week, I think that would be within the next week after we would have a very deep pullback. See, what else was I going to say? I'm starting to lose my voice. So what I would say is sticking to the hourly chart, though. That's what I was saying earlier. So if we look at, so first let me go to ETH. Something that I was pointing out earlier on ETH. Now, this very well could be the funding rate ARB. So if you look at ETH funding rates annualized, I think it was like 25%. The quarterlies were at like 10%. If you looked at Binance Perps, they were like $3 above at one point. So, let's say ETH was trading at 2060. It's like 2063 on Binance Perps and 2060 on the spot market. So it's, it's widening. Funding rates obviously elevated. You could look at those right away and see that. So I was looking at this, price moving sideways. If you look at the coin margin in red, this USDT margins down only, prices staying flat though. Now, during that down only period, price stayed flat, spot CVD moving up, open interest going up, right? So this is open interest right here. But that big spill ended up cleansing most of this open interest. So it's not like that big increase actually in open interest actually happened on that spike up. So when USDT margin was also buying. So this could very well be funding rate ARB, right? So what that means is, that's where this is diverging. You're getting people buying spot and then selling futures right against that spot and getting paid that funding rate, right? So you're getting paid, if you have enough big enough position, you can see how much that adds up. So that's a relatively risk-free trade. So that's possible. But I think more importantly for ETH, is that I think ETH is just earlier on the cusp of a very big breakout. It's before, it's earlier. It's like it's lagging behind BTC, right? It's been weaker than BTC this year, which makes it a little bit iffy because it's like, well, if BTC had a bigger pullback now, would ETH maintain strength? Well, when BTC was pulling back, we saw that ETH was able to hold up and hold its strength against BTC. So you had a big move on the 9th. You had a decent move today. I think a lot of the market is starting to rotate to ETH, and I think kind of rightfully so. I think that the best time to rotate to ETH would have been the ETF announcement, honestly. But I think you're getting some front running of that now. From a market structure standpoint, I don't really like to go by this alone, but we did hit this. We hit those June 2022 lows. So yeah, I think everything might take a breather, but I don't think it changes anything for the higher time frame trend. So like I was saying, 1 hour charts, if you look at alts, so from a high time frame standpoint, a lot of these things, like I said, so I shared, let's go over what I shared yesterday, because I shared SUSHI. There was SUSHI and another one. So YGG. So gaming, I think, catches a rotation. And one of the things with YGG and SUSHI, so you have YGG that was within this is a year-long composite, breaking outside of that, trading back within a 2-quarter long range, back in this runway wick, which I think ends up getting refilled. So this looks good. So that's on the daily, though. That's just a higher time frame setup. Looks like it's in the making. And then SUSHI was similar in the sense that we reaccepted back into a a year-long range, and it's not within the same calendar year. Actually, this one is. No, it actually extends into 2023. But from a quarterly standpoint, these quarterly profiles, you're just looking at something that's very clean, right? Now back inside of there, midpoint acting as resistance. I think as long as you're able to hold this level, so right around, what is that? That's as long as we hold these lows, to be fair. So say around 89, 90 cents. I think this is going to catch up. Obviously, BTC and ETH can't shit the bed. But everything's been catching a pump, so I don't see why even sushi garbage, bad sushi, wouldn't. But in terms of, so looking at these on the daily, and then if you're waiting for a daily pullback, just a lot of the times you're not getting them. You're not getting them as deep as you want. So I think what you have to do is, like I said, that the 1 hour chart has been your friend for these trends. So whether you're looking at, you could use moving averages, you could use, whatever you want. But 1 hour sweeps in particular. So playing 1 hour swing failures has been kind of bread and butter. I mean, this is just one-sided all the way up. Looks like someone just T-WOP'd that all the way up. So when I say 1 hour sweeps here, I'll just give you an example. So something like this, for example. So swing failure on the 1 hour. I mean, now we've tested it multiple times. That's render. My hotkeys are all fucked up. But more in particular, I mean that when you have your levels that are based off the daily, that are based off the higher time frame chart, waiting for that development on the 1 hour. I mean, otherwise, if you're waiting for a very substantial pullback to a level that we're 30-40% away from, I don't know if it's the case you're gonna get it. This is a volume profile visible range. Some of these are actually starting to look like this might be, who knows, we could start getting the deeper splash that everyone's kind of waiting for. So GALA is a good example, right? So where is GALA going to pull back to? Okay, here is an obvious area of congestion. So you have your market structure level there. But another thing, like I said, and just because the trend has been strong, another thing I would pay attention to is just where this momentum begins to cool. So, if we start to see the RSI chop around this, we start to see the RSI chop around this level between 50 and 60, and price is basing out all the way up here and you're still waiting for it to go much lower. I mean, that might be the opportunity to get that sort of either double top or snap back higher. Yeah, I changed my hotkeys. That's why it's not pulling out of that fast enough. AVAX, not something that looks good right now. I mean, some of these are probably done for a bit. I would assume so. I mean, guys, my opinion is that this is the beginning. It's not. I don't think this is the beginning of the bull market. So I still have my drawings from when I shared this setup. And I've been out of this already, guys. I feel like I have to be just honest about that. I got out of this around 350. So, I mean, just look how much this moved. And, like I said, this is not, if you looked at this on the daily, you didn't have anything, right? You had to look at this on the hourly. I mean, some people might use like a fib, see a 618 retracement, right? Or 50% retracement. You use whatever you're comfortable using, but just the point is, don't expect that you're going to get, if you see something like TIA up and you're like, I'm not buying this until there's a retest of whatever, this has no doesn't really have substantial history, but if you're waiting to buy SU at 50 cents again, I mean, in the near future, will you get it? It's anybody's guess, because this is just the entire way up. A lot of these have been just 15% up, 20% up, 10% down, 15% up, the same thing. Sort of like WorldCoin was trading before this big pop up. Let me just look at the chat real quick. I'm actually starting to, I can feel my voice getting hoarse. So your 1 hour chart, like I said, this is just ETH. You're looking at ETH futures and ETH spot. I mean, we probably got to a point where people are just starting to buy with leverage, and you have to wash that out. When you start to see that the long liquidations taper off, and that funding begins to reset, open interest comes off, that's probably another good example of something to tie in with your other analysis to redeploy or to look to get more aggressive. I don't think you want to look for any shorts where the market is right now. Could they pay off? Yeah, but as long as Bitcoin is inside of this prior range, I don't think it makes sense. So I think we're just hunting for longs right now. So as far as, I said, paying attention to the chart on the 1 hour, you want to, what you have seen over the last couple days with alts, especially with BTC earlier, was that, like I said, you're not getting really constructive, complicated pullbacks with, multi-day pullbacks. A lot of times your signal might be to buy on the first red, close of the first red day or the second red day. But what you can also do is look at, this is an indicator that I've had, and a lot of times if I'm trading and not having this up, I'll just draw the lines on myself. But paying attention to yesterday's low, yesterday's high, yesterday's open and close, like I said, this could have been just a sweep of that, which would have been normal in this trend where we sweep the prior day's low, and then that's your continuation entry. So keep an eye on your daily pivots. I think that's something that the daily and weekly pivots, rather. You have to try to find levels to get involved, because the whole market has been getting involved a lot sooner, and you haven't been getting any kind of real dip buying opportunities unless you zoomed in. Yeah, some of these finally starting to put in uglier pullbacks. So if we start to get 30% pullbacks, so this is at 20, get something really deep, I would expect, mechanical bounces around those levels for alts. So it looks a little busy because I have all the indicators on, but especially if you have multiple things line up. So, 30% pullback, it's right around your 618 fib. So, a pretty popular fib level. Again, and these are things that I don't really use trading 90% of the time. But if we're in a really strong trend, I got to start looking at the areas where it might be advantageous in these conditions to look. And again, that means paying attention to RSI, just changing it up a little bit. Trying to remember what I was looking at earlier. See, DYDX. I mean, this is one that sort of like Link, where if we're able to stay above this, let's say it's right around $3 level. I think this goes much higher. So, I mean, it all depends. I mean, are we just going to get rejected at this resistance level again? So a good example, right? Talked about 2 red days. If we end up closing out, BTC base is out, ETH base is out. This $3 level is an area that I just was talking about. If we do that and we close out, and let's say we close back within yesterday's range, and here's the close. Tomorrow opens up. Let's say tomorrow we get a move below that close, and then we're back in. A lot of the times, again, this is looking at the daily right now, but zooming in on the hourly, that's a trade that I would look to take. So that would be, prior day's low, put in a wick, we're trading back above. Again, if the rest of the market is strong, just because this is that $3 level is, I think DYD. So there's a lot of things I think that as long as the market doesn't shit the bed, they're going to start moving, because they're, there's a lot of pairs that have already put in substantial moves. There's a lot of pairs you could expect to continue. Like Link is one of them. So it's a perfect example, actually, because Link's technical level to return to would be almost 50% off our high right now. In a bull market, are you going to get that? If it's a bull market, no. So this is where I think it would pay to see when just the momentum's cooling. So we're not there yet, but if we're starting to cool, and it doesn't have to mean we come all the way down to that $10, $11 level. We start to do it up here. That might be where the consolidation, the correction could take place vertically, right? So it all depends. And honestly, this similar setup to what I was talking about with BTC, but it's just not as, it's an overextended version. But if we're going to be correcting into this gap, so you have a little bit of a gap right here, I could see a case where this cools off up here and then continues to rip, rather than coming all the way back down and testing that $11 area. If we go from the high of that, even just using something like fibs, you're still looking at around 12, 13 for a 50% move. Yeah, if people use them, it helps, right? But BTC still moving down. So optimal trade setup during the stream would have been if we're able to trade back inside yesterday's range. But instead, it's just been a good stream to hash it out and talk things over. Had that inside day break. I think, I think the next area I would want to see act as support is honestly kind of right where we are. So just remembering this resistance level right here. So that's right around 36. Again, really strong trend. Should you get a really big, flush out, take some of these things off so you can see it a little bit easier. Some kind of second dip into that level. Otherwise, if the point is, if that doesn't, what do you have? Diagonal, probably not as strong. More like your range. If we don't hold that 36 level, you're probably coming down to test in the 33s, 34.2 level. The point is not that's not a whole lot. This kind of structure is not that. It's not substantial. It's a grind up. It's not something that's been established for a long period of time. INJ already testing previous low. Let's see. Yeah, so this might be a good dip buying opportunity for INJ, honestly. I mean, as long as the rest of the market doesn't shit the bed, that's kind of the setup, one of the setups or conditions you would want to see. Strong trending move through yesterday's low, you know, engulfing that. Or excuse me. No, that's, sorry, that yesterday's closed out, but we took yesterday's low. That was what I should have said. Yesterday was a strong trend back down to this low, but took that low. Let's take a look at this real quick. Then I'm going to wrap it up, guys. My voice is actually starting to bother me. We're right on that hour mark. So flushed out OI. That's a good sign, right? Flush it out locally at least. I mean, you can't flush out all of the OI for these because, you know, it's, well, I mean, this is already down actually, so that's a bad example. So that actually might be a decent area, right, if we begin to find support there. I'm going to wrap it up, though, guys. My voice is starting to really kill me. But I appreciate you guys tuning in. Hit the like button, hit the subscribe button, and I'll post when I go live again next. Not really sure when. I have to get teeth pulled this week. Sucks. So I'll let you guys know. And yeah, until next time, have a fantastic evening. I'll talk to you soon.